Let's find some day trades, option trades, and swing trades. It is Tuesday, July 21st. We're a little more than 2.5 hours into trading. Market not doing a whole lot. If this screen looks different to you, it's because I just released a new dark themed version of Option Stalker. Had a number of requests for it, so it's a little odd to me. I'm going to try and work through it because I'm so used to using a light screen. But you can see out of the right corner here that this is the S&P 500. We gapped higher after a big rally yesterday, closing above that critical SPY 323.40 level, which was the high from June. So we made a nice strong close here. We gapped higher. We are above that resistance, but I'm just not feeling the impetus to move higher right now. You know, I've been stating that I felt that we could challenge that horizontal resistance level. Let's take a look at it on a daily chart, see what's happening. There you can see that's the horizontal breakout right there. Use the crosshair tool, and you can see right in there was the prior resistance, and now we are through it. So what does that mean for trading the rest of the day? If we would have been able to gap higher and continue to grind higher, that would have been the type of follow-through price action that we need to see. Apart from that, it's just a little pop. We have stimulus of $1 trillion, perhaps as high as $1.5 trillion, is currently being discussed in Congress. They are likely to pass a bill before the end of the month. They see that the need is dramatic, and they can't go on recess until they agree on that. We also heard that in the EU they are considering, or they have approved, a $2+ trillion stimulus package. So lots of money coming into the market. Keep the printing presses rolling. Coronavirus continuing to spread. That's keeping the economic recovery from really gaining any kind of strength or momentum. In fact, we've got a lot of states that are considering shutting down right now. So all of that is weighing on any type of economic recovery right now. We're into the meat of earnings season, so we're going to get a lot of releases. We've got some tech earnings this week, Microsoft. Yesterday, the rally in QQQ was incredible. Let's bring that up and take a look at it. And you can see how it rallied to a new relative closing high. But today, after challenging the high from a week ago, look at the price action. This is a bearish gap reversal. We gapped higher the whole day. We have been drifting lower and lower. And I took a look at Apple, Amazon, Facebook, Google, Microsoft, Netflix. All of them are trading lower. So tech stocks are getting very, very pricey right now. I'd taken a look at a couple of research reports. Fundamental analysts, they feel that on a valuation basis, the market might be justified at its current price level in about another 8 to 10 months. Well, there are two things that can happen. Either the market goes sideways for 8 to 10 months or the market pulls back. You can see that on a broad-based scale, the rally has been very narrowly defined by a handful of tech stocks, but the larger portion of the S&P 500 has not been able to get off the deck. We're seeing weakness in brick and mortar retailers, energy stocks, the financial sector. We got earnings reports from banks last week. Lots of write-downs coming there. Plus, a sluggish recovery is not good for them. Plus, a 0% interest rate environment is also not good for profits. So, healthcare and tech, those are the two sectors that have actually been moving the market higher. The rest of them have all been lagging. So, let's go in and take a look at what we've got. I'm going to keep this fairly short. I've got a couple of stocks that I think will work. And you can see this is BYND. This was on the one of these searches. I believe it was on the heavy buying search. And we'll take a look down that very quickly. Might have been on a relative strength 30 search, but in any case, it was just recently on one of the searches. And I do like this stock because you can see that horizontal breakout right there. We've touched that breakout a couple times, 1, 2, 3 times. And that support seems to be coming in down here around the 114 level. So I'm going to click on trade. I'm going to bring up the option chain. I'm going to move that over. And if we hover over the E, we can see that earnings are not until 8/3. That gives us one option expiration that we can lean on. And so we're going to go down to the July 31st option expiration. And we are going to click on the 114 put. And we're going to click on the ask of the 113 put. And you can see that the market on that spread is 8 cents bid, offered at 16 cents. If we get a little bit of market weakness today, I think that's a pretty decent spread to try and get done for maybe 18 cents or so. If you can squeeze 20 out of it, that'd be even better. So on a 1 point difference between the strike prices, if we get a 20-cent credit, that represents a 25% return based on our risk and our margin requirement. And I feel that with BYND, the stock should do pretty well heading into earnings. We've seen a nice rally in the stock. It's pulled back a bit here to this major support level. So I think that support level is going to hold. A little bit of a head and shoulders formation in here, maybe. But I think that support is going to hold, and we're actually inside of it a little bit if we go down to the 114 strike. Plus, the stock tends to have very high option implied volatility, so we can distance ourselves from the action. We would have about a week and 4 days for this spread to play out, but I think it's going to do fairly well into earnings. They've announced lots of different countries that they're expanding their product into, so that's good news for them. Apart from that, I am currently short QQQ, and we'll go back into that chart. We've got this big gap reversal here and a steady drift lower. So how would I manage this trade? I'm going to click on alert. I'm going to click on one of these bars here. I could click on the very high there, and here I'm going to choose this one instead so I can get a little bit more of a gradual slope. And right there would be that high. Let me try that again. I'm going to click on this one. Actually, I'm going to choose a much lower gradual slope because that'll keep me in the trade longer. You can see that's the downward sloping alert line. If the QQQ is able to recover and get above that downward sloping trend line, I will exit the trade. If it continues to just drift lower all day, and typically on a gap reversal like this that's had that type of steady selling pressure, that's what you're going to see. So as it continues to move down, this line will extend lower and lower, and it'll help me lock in my profits. If I get a big pop in QQQ, I will know. But I'm looking to probably make another 50, 60 cents out of this, so I'll be watching it. I'm not trading much. I'm really trading small size. In the morning, I'm trading half my normal position size. In the afternoon, I'm trading a quarter of my normal position size. This is a low probability trading environment. We are in the dog days of summer. That means that you have to keep your size down. I'm going to put the SPY up here. We can take a look at what it's doing. So you can see this resistance level is still very strong. Look at how much time we've been spending up here. 1, 2, 3, 4, 5 days trying to get through this. Just cannot get through it. I don't see what is going to push us through if earnings can't. And I've been stating that as we get into August, all of the mega cap tech companies will have reported. The air will come out of the balloon. Those are the stocks that have been leading the market charge higher. We're going to have another round of stimulus. It's going to take continual stimulus. This economy is on a respirator. We have to keep putting money in and putting money in and putting money in and putting money in. It can't stand on its own 2 feet. As long as the coronavirus is around, as long as states are continuing to shut down or phase back their economies, we can expect the activity to continue to struggle. People are changing their purchasing patterns. They aren't that anxious to go out and eat dinner. There's a dark cloud hanging over the market right now. So we get into the middle of August, politicians are away on recess, Fed's away on recess, coronavirus continues to spread, Biden leading in the polls, not market friendly because a lot of the tax credits that Trump initiated are going to be pulled back. I think valuations are stretched on the tech side. I'm looking for a pullback. I've mentioned to you that I feel we still have some decent price action for the next 2 weeks, but after that, I think things really start to deteriorate and we could see a nice market pullback late August and well into September. So I'm preparing for that. As the market comes in, I'm going to be looking for opportunities instead of managing losing positions. I think you should be in the same mindset. And for those of you who are swing traders who can't keep an eye on the market during the day, if you think you're going to be fast enough to pull the plug on your longs, good luck. We've seen 100 point and 200 point S&P 500 drops this year. When it comes, it could come very, very quickly. I'm also reading about some credit issues that we're seeing in high growth bonds. I'm also reading that there are a number of Americans who could be evicted in October to the tune of 25 million. 12 million people didn't pay their rent in May. These are big numbers. And it tells you that credit is so excessive and so high that people cannot shoulder 1 month off from work. They don't have anything saved. And it's not just on the consumer side, it's on the municipal side, it's on the state side, it's on the government side, it's across many different governments. They're all guaranteeing each other's currencies through cross currency swaps. So it's a very tough situation for us to be in. But hopefully, I'll be wrong. Things will work out. The market will stabilize sometime late September, early October, and then we'll be back off to the races. If that happens, I'm fine getting long again. But right now, I see the risks far greater than the rewards. And so that's why we are on the sidelines. I think a trade like BYND might work. Let's see what else we can find. And I'm going to go to the 5-minute chart so I can keep an eye on SPY while I record this video. And let's go in. I've already taken a look. DKNG. I like this stock. I highlighted this stock last week. It continues to move higher. I like this downward sloping trend line that was breached to the upside. We've seen that this is a huge flyer. It can really go well. And it's starting to gradually make its way higher. So I think DKNG does fairly well also. See if we can find another one. And I'm just clicking through and looking for stocks that I like here. I'd stay away from retail, even if they're bouncing here, especially brick and mortar retail. I have no interest in trying to buy those stocks or bottom pick them. Maybe on an intraday basis, I can day trade them if I see particularly strong momentum, but otherwise, I'm going to stay clear of them. ZM, that's been a high flyer, pulling back a little bit. Double top, lower high, not particularly a great sign. Cost has been nice. COST. I like Costco. Look at this horizontal breakout right here. That's nice. Stock is trying to get through this horizontal resistance. It's able to hold the gains. And now today it is trying to make a new relative high. So I think it can do pretty well. Heavy buying. SPCE has been nice. Been trading that. You know I like that. I did the video 2 weekends ago highlighting that SPCE bullish put spread down here at the $14 level. That will be toast on Friday. That's a 25% gain on the margin that we had to put up for that trade. Excuse me. Starbucks. If you watch my video Sunday night, I'd mentioned trying to sell an out of the money bullish put spread on Starbucks, keying off of that $71 price level. If you watched it yesterday, you had a very nice intraday low here down at the 73.75 level. We were not able to enter that bullish put spread, but the stock had a really nice recovery. And if you waited right in here till it got through the high of the day and the prior day's high, you had an excellent opportunity to make some money on that day trade. And boom, here we go again today. Moving higher. These are all off of that search that I showed you, buy into earnings. These stocks have a 75% chance of rallying into the earnings announcement, and we know that because that's what they've done historically. So I'm going to continue to use this search to look for opportunities. So let's click through and see if we've got a couple of other. Gold. Money printing like mad around the world. What does that do for gold? it is bullish for gold. You can see how gold is right on the high of the day here. And I think gold continues to perform well. It has broken out very, very nicely. So you've got rally up, compression at the high, breakout, continuation. So I think gold continues to move higher. So I've given you a few stocks to consider. BYND, I think that could do well for a bullish put spread ahead of earnings season. So I like that. GLD, I think that continues to do really well. You could even look to sell some out of the money bullish put spreads below this technical breakout right at the $170 level. I think that type of trade would make sense. SPCE continues to grind higher. I like that. I like DKNG. That also looks good. What do I think the market's going to do today? Not a whole lot of anything. Just not seeing a lot of movement. So if I had to pick a trade right now, I would say the tech, after making that new relative high and having that gap reversal, I think that it continues to be weak. I think it continues to weigh on the market. You can see how the market came and established that low right there. It did not quite fill in the gap. It tried to rally. It found resistance before it was able to challenge the high. Long tails above body, gradual drift lower. I think we're going to challenge the low of the day and we're going to fill in the gap. And who knows, we may even sink a little bit lower after a big run yesterday. Your support level is at the prior resistance level, which would be SPY 323.40. That's a critical support level to watch. If that support fails, then this would be what I call a failed breakout. There you've got your breakout. And if we close back below this level here, that would be a sign that I think the market might be very ready to roll over. Don't know yet. I'm not going to short anything yet. I need to see a big technical breakdown. I'm going to put up the SMA for the SPY using the 200-day and the 100-day moving average. And for those of you who think you're going to be very, very clever and you're going to short this market in advance, good luck to you. That's a great way to lose a lot of money. We have an upward sloping trend line right here. That would be your first chance to try and short this market, but it must be violated first. You do not go in and short before you have technical support that's been breached. So we breach that. We get follow through selling. We breach the 200-day moving average, which we've tested twice. Okay, below the 200-day moving average, you can get short. We come down and test the 100-day moving average. Then you need to be thinking about taking profits. That's at about the 290 level. And after that, market kind of goes sideways, tests that support, and then breaks it again. Okay, then you can come back in and short it again. With all this money printing, there's just a tremendous amount of upward pressure. It's a lot of money floating around. It has to go somewhere. It's not going into bonds because bond yields are not keeping pace with inflation. So it's going into stocks right now. Which stocks? Tech stocks. So very low probability market. If you take anything away from this presentation, I think it's that you should go to cash and wait for clarity. It's the best place to be right now. That's all I've got for you today. If you like the content, please give it a thumbs up. Please post your comments. You know that I'll try and reply to all of them if I can. Make sure that you subscribe to the YouTube channel and turn on your notifications. That way you'll know when these videos are posted. Also, make sure that you check out my Twitter feed. I post my pre-open market analysis and an early stock trade on Twitter. So that way you can get a feel for what I'm thinking the market's going to do, and you'll get a good pick as well. I'll have that link in the description section. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.